Hello guys, Jeff here. Welcome to the Intelligent Investor. In today's video, we're going to look at why you should buy stocks. No other investment available holds as much potential as stocks over the long run. Not real estate, not bonds, not savings accounts. Stocks are not the only things that belong in your investment portfolio, but they may be the most important assets in your portfolio. Since 1926, the stocks of large companies have produced an average annual return of more than 10%. This takes into account the Great Depression, Black Monday 1987, and the stock slide that followed 9/11. You don't have to beat the market to be successful over time. There is risk involved, as there is in all investments. But the important thing is to balance the amount of risk you're willing to take with the return you're aiming for. Okay, let's look at different kinds of stocks. First, it is important to understand what a stock is. When investors talk about stocks, they usually mean common stocks. A share of common stock represents a share of ownership in the business or the company that issues it. Therefore, a share of stocks represents ownership in an underlying business. For example, if you own 1,000 shares of Google, it means you own a small part of Google. Okay, the price of the stock goes up and down depending on how the company performs and how investors think the company will perform in the future. The stock may or may not pay dividends, which usually come from the profits. If profits fall, dividend payments may be cut or eliminated. Many companies also issue preferred stock. Like common stock, it is a share of ownership. The dividends for the preferred stocks are fixed when the stock is issued. Because of this, preferred stocks are more comparable to bonds than to shares of common stocks. Preferred stocks have priority when it comes to dividends over common stocks. Preferred stocks dividends are always paid first before the common shareholders get their dividends. It is hard to think of a compelling reason to buy preferred stocks. They generally pay a slightly lower yield than the same company's bonds, and they are no much safer. Preferred stocks are much better suited for corporate portfolios because a corporation doesn't have to pay federal income tax on most of the dividend it receives from another corporation. Stocks are bought and sold on one or more of several stock market exchanges. The most famous being the New York Stock Exchange and the American Stock Exchange and the Nasdaq. Stocks sold on an exchange are said to be listed there. Stocks sold through Nasdaq may be called over-the-counter or OTC stocks. Let's look at categories of stocks. Growth stocks. Growth stocks have good prospects for growing faster than the economy or the stock market in general. They are average to above average in risk. Investors buy them because of their good record of earnings growth and the expectation that they will continue generating capital gains over the long term. Let's look at blue chip stocks. Blue chip stocks are generally industry-leading companies with top-notch credentials. They tend to pay decent, steadily rising dividends and generate some growth, offer safety and reliability, and are low to moderate risk. They form a core component of many investors' portfolios. Okay, guys. A stock is not just a ticker symbol or just a certificate lying around. It represents ownership in an underlying business. The reasons you should own stocks are: you own an asset that generates income and appreciates in value over time. Stocks can keep up with inflation. Stocks can be used as collateral for getting loans. Stocks can be assets that can be passed down to kids when one dies. Okay, guys, those are the reasons for owning stocks. I hope you've enjoyed this video. Kindly like, subscribe, comment, and share. I would love to hear from you guys. Which stocks are you buying? Comment down below.